So now a 100K candle, green hopefully, is an omega candle. So the funny thing is, it's already happened. Since I created the concept of the omega candle, if you look at Egypt, they had like a 14 omega day. So 14 omega candles. It went up 1.4 million Egyptian pounds in a day, Bitcoin. And then in Turkey, they're regularly having omega candles every couple days now. So is it crazy to have a 100K candle on Bitcoin? Not really. I mean, when you're printing $10 billion a day is equivalent to 140,000 Bitcoin a day, roughly, based on Bitcoin price. So that's a massive amount of money printing, just as debt, not paper, but as debt. But it's the same thing at the end of the day. It's all contributing to that failure of that legacy financial system. So $100,000 candles are not really crazy when you think about it, and $1 million Bitcoin is not crazy either, especially the trajectory everything else is going on.
Welcome to our channel. Samson Mow begins by introducing the concept of the Omega candle, a significant price movement in Bitcoin that he has popularized. Traditionally, the trading community has been familiar with the God candle, representing a $10,000 movement in Bitcoin's price. Samson has taken this concept further with the Omega candle symbolizing a $100,000 price movement. While it may seem far-fetched to some, Samson argues that such movements are not only possible but have already occurred in different forms globally. Samson references recent events in Egypt and Turkey. In Egypt, there was a day when the value of Bitcoin surged by the equivalent of 1.4 million Egyptian pounds, a movement equivalent to 14 Omega candles. Similarly, in Turkey, such significant price movements have become a regular occurrence. These examples highlight the potential for dramatic price changes in Bitcoin driven by economic instability and massive money printing in these regions. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
The trading circle has the concept of a God candle, a 10K candle, for some time. And then I just figured it's time we have a bigger candle, so it's a 100K candle. And I posted some ideas for it. I picked Omega candle as my favorite, and people started liking it. So it just became a thing. So now a 100K candle, green hopefully, is an Omega candle. So the funny thing is, it's already happened. Since I've created the concept of the Omega candle, if you look at Egypt, they had like a 14 Omega day. So 14 Omega candles. It went up 1.4 million Egyptian pounds in a day, Bitcoin. And then in Turkey, they're regularly having Omega candles every couple days now. So is it crazy to have a 100K candle on Bitcoin? Not really. I mean, when you're printing $10 billion a day is equivalent to 140,000 Bitcoin a day, roughly, based on Bitcoin price. So that's a massive amount of money printing, just as debt, not paper, but as debt. But it's the same thing at the end of the day. It's all contributing to that failure of that legacy financial system. So $100,000 candles are not really crazy when you think about it, and $1 million Bitcoin is not crazy either, especially the trajectory everything else is going on. The thing is, all of those things are possible, and we're getting closer and closer to that reality every day. Every day the fiat system is staggering on and limping along is just a little bit closer to that point. And I think the biggest thing to look at is debt. Like, we're at 34 trillion in debt in the US, and we're accruing a 10 billion a day. That's not sustainable. You can't outgrow those levels of debt. So something has to give. And at the same time, you have the erosion of trust in the ability to store money at another central bank. And this happened with the Russia-Ukraine conflict, right? So when that happened, their funds were seized. And I think this sent a massive signal to everyone every country in the world that you can't keep your money at another place. It's got to be your own. But they still haven't wrapped their heads around the fact that they should just use Bitcoin. So they're trying to create a BRICS currency or whatever. But these are still currencies based on circles of trust. That's no different than using the US dollar. You're just distributing that trust with others when you could distribute that belief into Bitcoin and just use Bitcoin and believe in math and trust math. But that whole system doesn't work anymore. So who's going to buy T-bills aside from Tether? I don't know. But I think demand for that is going to drop massively. And nobody wants to be holding the bag for the US when they give up on their debts or default on their debts. So all these things combined just show that Bitcoin is really the only option that is out there today. And we have come to that realization, but the broader world has not come to that realization yet. Well, central banks are going to central bank and centralize. It's just what they do. With the recent thing with SWIFT, I think it's a network it's a platform for CBDCs. But again, as we touched on, trust in centralized institutions is at an all-time low. So who's going to use this? Maybe some proxy states of the US, but any major player is probably not going to do it. That's why BRICS is trying to make their own thing, right? But you can't have a global financial system without the globe. You'll have a US-centric, US-aligned financial system that might interoperate with the European system. But at the end of the day, there is no competition. Nobody wants to use a centralized form of money. And you have examples of this in the world, like the e-Naira from Nigeria. No one used it. 1% usage. And then they started limiting ATM withdrawals. And now they're going after crypto exchange executives, blaming crypto. But anytime there's any optionality, no one's going to use that. The only chance I think a CBDC would have is if the currency was hyperinflating and you make the new currency, the new German mark in a CBDC and you say, this is the new thing. But it's too late. Bitcoin already exists and people gravitate to the freest money because money has to be free. Anytime you centralize money, you're automatically intertwining it with morality of different types. Either it's what you can spend it on or what you should spend it on, and it becomes highly politicized and it loses the properties of money. Money is supposed to be inert, apolitical, elemental. That's what Bitcoin is. It should not care if you're buying a gun or paying for an abortion or whatever, or any of these things, or even like financing terrorists. If you want to go after terrorism, you should go after terrorism, not the chance that someone financed terrorism, because this is a very slippery slope. Because who defines terrorism? The government. So you have the Trudeau government saying, we are all terrorists because we financed the trucker protest, which was a peaceful thing. Mm-hmm. So all of a sudden, we're all terrorists and we all get our bank accounts frozen. But this is how dangerous it is to be using a centralized thing, and people are increasingly aware of this danger. That's why they're never going to use a CBDC if there is a choice. Whether there is or isn't a choice is outside of our control. But I think people will leave if they can leave. You'll see a mass exodus if it becomes forced. But I just don't think economically it is feasible because no one will use it. I don't think the US will impose it onto the population. There'd just be riots at that point and it would just all come apart. So it'll just be a failed experiment in my view. They'll try to launch it, no one will use it, and then they'll just say, oh, okay, it's over. But we all know it's nothing new. You already have a digital money. Like everything's digital. Venmo, PayPal, dollars, your bank dollars are all digital already. This is just digital but controlled by one entity, a central bank.
Discussing the recent developments in central bank digital currencies CBDCs, Samson expresses skepticism about their potential success. He mentions the launch of platforms like SWIFT for CBDCs, but argues that trust in centralized institutions is at an all-time low. Historical examples, such as the low adoption rate of Nigeria's Naira, demonstrate that people are reluctant to use centralized digital currencies. Samson believes that unless these currencies are introduced in a hyperinflationary context, where they might temporarily stabilize the economy, they are unlikely to gain significant traction. One of Samson's key arguments is that money should be apolitical and free from centralized control. He explains that when money is controlled by a central authority, it inevitably becomes intertwined with moral and political decisions. This politicization undermines the fundamental properties of money, which should be neutral and universally accepted. Bitcoin, as a decentralized currency, avoids these pitfalls and offers a more reliable alternative.
The thing is, unit of account is so sticky. The dollar itself is no longer a store of value. It has not been since it lost the gold redemption. And it's even not so much a medium of exchange anymore, because if you think about it, like when the value of the thing goes down, it loses the ability to store value. It's not really a good medium of exchange. You can not, and they're actively trying hard to make it not a medium of exchange too, because they're limiting how much you can send to another person. Like in Europe, they don't want you to send money to other people. So the ideal situation, I think, is you get a job somewhere, you're earning money, you're paying taxes, and then you can consume what you need, but only what you need. So sustenance earning and sustenance spending, which is kind of crazy. So not saving at all. You just exist in the hamster wheel, and you can spend exactly what you need to keep yourself alive, but not save and not send to anybody else, not accumulate wealth. So the erosion of MOE is increasing for the fiat money. Even in the US, right? Like your limit is now to report $600 transactions to other people. But what does $600 get you? Maybe a nice lunch in New York these days, right? And eventually it's going to be your groceries for the week. And then it's going to be a cup of coffee. So it just, these limits are based on fiat numbers just don't make any sense, because the fiat doesn't make any sense. But what is happening is you're stuck with the dollar, because unit of accounts are very sticky once you achieve it. If you're operating a corner store in New York and whatever, you're pricing your candy bars in dollars still, right? You're not going to price them in sats, and you're probably not going to make a change until there is a catastrophic failure in the system. And examples of this in the past are people denominating in hyperinflating currencies, even though it's hyperinflating and you're like carrying a wheelbarrow of old German marks around. You're still going to price your bread in marks because it's so sticky, right? And that's the magical thing about unit of account. Once you hit that, it's just difficult to remove it. And I think that's all that's keeping the dollar alive, and the fact that a lot of countries' debts are denominated in dollars as well. But that's the last thread. It's like hanging by its little thread, and the only option is to go into Bitcoin. But you can see, like, even though you have a superior option, the fact that you have to learn something about it and study a little bit and understand it versus staying poor and denominating with this old unit of account, people would still rather denominate in that old UOA.
Samson also discusses the concept of the unit of account, which refers to the gibber measurement of value in an economy. He notes that the US dollar, despite its declining value, remains a dominant unit of account due to its historical gibber. Changing this gibber-ingrained standard is challenging, even when superior alternatives like Bitcoin exist. Samson suggests that a catastrophic failure in the current financial system may be necessary for people to shift away from traditional gibber of account and fully embrace Bitcoin. Samson Mow argues that the gibber to Bitcoin is inevitable, driven by the unsustainable practices of the current financial system and the increasing awareness of Bitcoin's advantages. While the broader world has not yet fully realized this potential, the ongoing erosion of trust in traditional financial institutions and the growing recognition of Bitcoin's stability and security are paving the way for its widespread jabber. Please like and subscribe my channel.